That's hilarious. Here's what I tried to do. Hello, I'm David McGard. This is Property Value. I'm here with Christian Lalong,
Good morning.
and I'm trying to figure out the effects. But bear with me.
It's all right. It's
And
Monday
I'll come
morning.
in. All right, Monday morning, January 24th. Commercial real estate news, headlines, data, analytics, all for your listening and viewing pleasures.
Mm-hmm.
What's going on with the 10-year?
Right. Well, first things first. Good morning, everybody. And 10-year is looking at 1.736 right now, and it's estimated to end between 1.718 and 1.784.
So it's holding steady.
Pardon?
It's holding steady.
Yep. It's actually a little bit down from the last time that I talked about it, which I believe it was about 1.8. And prime rates are still over at 3.25. So those haven't changed a bit.
Perfect. So I'm going to jump in to the first, or a week ago, I went over South Florida markets. Monday, I went over like the whole South Florida, meaning Palm Beach County, Broward County, and Miami-Dade County. Multifamily was Monday. Then I believe I did overall office on Tuesday, and industrial on Thursday, and retail on Thursday.
Yeah.
I think I missed Wednesday, but whatever. You get the point. So today's Monday, and I'm going to look at just Miami-Dade County and start with multifamily. Going to bring that up on the screen. Let's see if we can make this look a little better. And let's see if I can even get it a little bigger. Yes, there we go. All righty. So in Miami-Dade, there is 243,700 current units in the multifamily inventory. That's up 3.1 year over year. Under construction units, there's approximately 17,500, 17,600. That's up almost 19% year over year. So cranes are still here. Construction is going robust. 12-month absorption units. There was 13,000 over the 12 months. There's 13,600 units absorbed. That's up 68%.
Wow.
That is huge demand. Huge demand. Almost can't build them as fast as they're moving in. Vacancy rate at a low 3%. That's dropped 2.8% year over year. Market rental rate per unit is at $1,800. That's up 15% year over year. So we hear this all across platforms. Rents up, but here's Miami-Dade showing 15% year over year. Market sale price per unit at $267,000. It's an average, $267,000. Again, up 18%. So if you had an asset, it might have went up 18% year over year. That's a huge jump. Market cap rate, this is an average, at 4.7%. So if you're buying multifamily, if you're chasing that yield, we're averaging 4.7 in Miami-Dade.
Mm-hmm.
I just want to look at a 3-year of rental growth. You know what? It doesn't even matter because it's all right here in the headlines of absorption at 68% year over year, market rental units 15% year over year up, and market sale price per unit 18% up. That's amazing.
It's just absolutely fantastic. And even then, that cap rate, I think,
you say it's fantastic, but it depends on what side you're on.
yeah,
If you're
absolutely.
on the developer investor side, absolutely. If you're on the person who needs to move into a rental unit,
Yeah, struggling.
well, I don't know about struggling, but it's, it depends on how much you're able to pay,
Mm-hmm.
monthly, yearly.
Right, but
based
no
on
doubt
your
about it,
income.
though, that the entire just market is flaming hot. In fact, I would say that it's arguably the one of the hottest commercial real estate markets, just like Globe Street is reporting here with my first article. Florida is arguably the
Nice
hottest.
segue.
Thank you, man. Florida is arguably the hottest commercial real estate market. So,
Why don't you move over this way?
oh, right here. There we go. Oh, freeze frame. So, Florida was arguably the hottest commercial real estate market in 2021, quarter four, boasting 9 out of the 15 cities in the United States, according to the NAR's recent release 2021 quarter four commercial real estate metro market reports. Florida, so Florida is arguably right. That. Okay, here we go. Its findings are based on NAR's commercial real estate market condition
Slow down, man.
index.
Slow down.
Oops, sorry. That captures market trends in the multifamily, office, industrial, retail, and hotel property markets in 390 metropolitan areas or portions of these areas. Based on the index, Florida had 9 out of the top 15 among metro areas of populations of at least 250,000 people. Florida is following Florida is going to be the state of Washington, with 3 metro areas in the hottest commercial real estate market list, North and South Carolina, as well as Tennessee. Let's bring that down to a more micro level. Miami Beach and Kendall area, Miami Beach and Metro. Office vacancy rate in 2021 quarter four was 10.5% compared to 12.2% nationally. As well, it experienced a net absorption of office space in the past 12 months, 643,000 square feet. While nationally, the office market gave back 39 million square footage of office space. The asking rent in the multifamily apartments is up 17.4% on a year-over-year basis, compared to 11.3% on a national basis. As well, regarding industrial, the rents were up 15.3% year-over-year, compared to the 8% nationally. Vacancy rates in brick-and-mortar retail stores were as low as 3.4% compared to the 4.6% on a national level. As well, was experiencing job creations in hotel and leisure industry at a faster pace than nationally. I think this has to do a lot with the fact that Florida has just kind of stayed open over the last year, allowing all these people to just kind of flood in and absorb and absorb and absorb. So high flyers, according to the NAR index, include Charleston, South Carolina, Durham, North Carolina, Florida's Fort Myers, Jacksonville, Miami, Naples, North Point, Brandon, Sarasota, Orlando, Palm Beach, Port St. Lucie, and Tampa.
What was that?
That was so this is just those were all the top cities that were used in the NAR's reporting for 2021 quarter four of the commercial real estate industry.
But they're saying, like, summarize it.
Right. So pretty much
after that was a lot of data. So
right.
All I heard was the last 4 or those cities. So I was
no problem. So pretty much Florida is where it's at. We're having 9 out of the 15 top cities in Florida. Absorption is going really high. On a national level, Florida compared nationally is just doing better. We're having more jobs being created as well. We're having more, as we're seeing in the data with multifamily. Absorption rate is really good. Vacancies are really low. And as well, investors are getting really good yield on returns based on what we're seeing in the data.
Great, man. Talking about data and investors and developments. my next one says South Florida real estate projects in the pipeline for week of January 21. More or less of what's going on in Miami, since I'm kind of focused strictly on Miami. It says Crosby condo planned at Miami World Center. Related group and Merrimack Ventures revealed plans for a Crosby condominium at Miami World Center. It's 33 stories, 450 units with 24,000 square foot of ground floor retail. Prices would start in the 300s. There's also a twin towers proposed in Flagler Village, which is in Broward. 1.43 million square foot DNA on 2.8 acres, 612 multifamily units, 74,000 approximately commercial space. There's also GL Homes seeks new community. GL Homes is pursuing Palm Beach County approval to shift density for a new home community from the northwest part of the county to the area of West Boca. It would include 3,897 homes. The Indian Trail Grove site was approved for 3,897 homes in 2016. They since put the Sunrise-based home builder offered to reduce that by 1,285 homes and give 1,600 acres to the county for conservation. In exchange, GL Homes would receive permission to build approximately 1,200 homes on 682 acres. That is in Palm Beach County. Apartments proposed near Aventura Mall. Ram Realty Services and Pinnacle Communities proposed an apartment project just west of Aventura Mall near Brightline Passenger Rail Station. The developers recently acquired 2.3 acre site for $15.4 million. They're seeking approval for 285 residences, fitness center, and pool deck. Their 36 units would be workforce housing. Another project in Palm Beach County pegged for warehouses. The owner of the 2.6 acre site at 65, 62, and 6480 Belvedere Road near West Palm Beach wants to rezone it as industrial. So wants to rezone it as industrial. The Windsor Industrial Project was proposed. The warehouse would total 50,000 square feet approximately, but 2.6 acre site. They want to rezone it for industrial. It doesn't say what it is zoned today, but nope, doesn't say. I don't know what that would be. By the numbers, 130 million price that Starwood Capital Group paid for a marketplace at Outlets Retail Center in West Palm. 82 million price that Wharton Realty Group paid for Homestead Pavilion Shopping Center. 3.1 increase in foreclosure filings in South Florida in 2021, according to Atom Data Solutions, and 24 million price that Pacific Star Capital paid for Denny's restaurant building. I've seen quite a few Denny's being sold lately. I don't know what's going on with that business. But that's my update on that. What's going on? What do you got? What's your next one?
Right. Well, since we're talking about multifamily in the graphs today, I thought we can go ahead and just bring that back over. And again, this is by Globe Street. Apartment rents rose 14% last month, and the biggest jump in over 2 years. So, average months listed in the United States increased by 14.1% year over year to $1,877 in December, according to a report. And this was the largest annual jump since at least February of 2019, the earliest month in the data available. Meanwhile, the national monthly mortgage rate for home buyers climbed 21.6% year over year. The growth in the mortgage rate, the mortgage payments has been driven by both climbing prices and climbing mortgage rates. And those rising mortgage rates continue to push potential home buyers into renting instead, which pushes up demand and prices for rentals. Mortgage rate increases are accelerating, which will cause both mortgage payments and rent growth throughout 2022. Year-over-year rent prices increases outpace year-over-year mortgage payments increases for a new home buyer in just 16 of the 50 largest U.S. metro areas in December, which we know based on the last that on the last report that 100% Florida, specifically Tampa, Miami Beach, and Kendall area are all going to be in that list. Separately, single-family rents are also on a tear, with the asset class rising 11.5% year over year in November, and the increase hit a 7th consecutive record high. So, pretty much what we've been just kind of talking about, with supply being very limited and going down, demand being at an all-time high, as we were able to see in the vacancy rates. Of course, just supply and demand economics. If you're having a high demand, you're not having enough supply, you're going to increase the prices. And we're seeing that not only in South Florida, but on a much, much, much national level. And it looks like it's just only getting even worse. Well, depending on who you ask.
Getting worse?
As in there's not enough supply.
Oh, for single family houses?
Mm-hmm. And multifamily as well. Construction, well, as we saw, we're having a whole bunch of developments under construction now. They're being built up. So hopefully within about 2 years, you would say, a majority of those projects will be built up.
Yeah, it takes about 24 to 36 months for development from ground to, getting their occupancy. But look, man, construction creates jobs, and jobs is what we need.
Absolutely.
Always, so construction's good. All right. So I thought this was a cool, catchy headline. The tale of two office markets. Broward vacancies rose while Palm Beach counties decline. So Broward's vacancies rose while Palm Beach County declined. So why? Landlords in Broward are offering more tenant concessions, but Palm Beach County office owners are raising rents. So where would you want to own an office building? Let's see what it says. New office leasing activity is on an upward trajectory in Broward and Palm Beach, but vacancy rates remain in high double digits in both counties. I remember when I looked over all South Florida, it was at, I believe, 10% vacancy. According to the recently released report, Palm Beach County fared better than Broward in filling up vacant spaces in the fourth quarter of 2021, as well as boasting landlords' confidence to raise rents. Palm Beach County also outperformed Miami-Dade County, where the overall vacancy rate hit 16% in the final quarter of 2021. 16%. I thought 16% was only in downtown. I wonder if they're talking about all Miami-Dade, or we'll see that. We'll remember that they said 16% here. And tomorrow maybe I'll do office for Miami-Dade. I want to see if that's correct. Broward landlords, on the other hand, were forced to provide more tenant concessions, meaning they're giving more free rent, more TI, and space improvements and new projects that came online affected vacancy rates. So here you go. Broward is what I just said, is that since they are building offices in Broward, the vacancies rose. That's typical when you have new product. It has to adjust in your absorption rate, and your market has to normalize. It says in Broward County, the vacancy rate jumped to 16.9% in 2020's Q4 compared to 14.7% during the same period previous year over year. The increase was due to new Class A office space coming online, like I just mentioned, in the Los Olas area. Still, new leases totaling 2.4 million square feet helped soften vacancy below in Broward during the last quarter of 2021, according to the report. Most new tenants flocked to Broward suburban offices, submarkets in Q4, with only 20% new leases in Fort Lauderdale Commercial Business District. So we're seeing some flight to the suburban area. However, the number of new leases was not enough to offset tenants vacating spaces during the last 18 months. As a result, the overall average asking rent dipped to $35 in most recent quarter from $35.94, which isn't much of a dip, but it is a dip in 2020's Q4. Landlords in both Class A and Class B assets were more aggressive with pricing while offering more concessions, as well as higher tenant improvement amounts to make tenants sign deals. That's in Broward County. Now looking at Palm Beach County, Palm Beach County's office market outperformed Miami-Dade and Broward. They were the hot spot when it came to raising occupancy. The county's overall vacancy rate ended the last quarter at 13.2% compared to 14.5% during the same period of 2020. New leasing activity jumped 77% year over year, with tenants moving into more than 2.2 million square feet of new office space. As I'll say, absorbed Palm Beach market had a total positive absorption of 528,000 square feet in 2021, the highest since 2016. As a result, landlords raised the average asking rent by 3.8% to almost $40, $39.86 a square foot in the most recent quarter. In the 2020's fourth quarter, Palm Beach office rents were paying an average of 38. So a whole dollar they went up, a little bit over a dollar. In the county's commercial business district, which includes downtown West Palm Beach, Class A rents hit $65 a square foot, a 6.7% bump compared to the fourth quarter. So that was the real improvement, was West Palm Beach Class A rents up to 65, almost a 7% jump year over year. Palm Beach County's office market performance likely fueled bullish investor activity as a number of significant office deals closed last year, including the slate of acquisitions in West Palm by the developer Stephen Ross, which is Related Group, as we spoke on this podcast before. One of the sites acquired for $20 million in July. Ross related companies in building the 25-story One Flagler, where two financial firms and a Greek restaurant have signed leases. That's Palm Beach County. That is the Wall Street of the South. What do you think?
Well, I think first of all, as you mentioned, Wall Street to the South, of course, is just going to be doing really well. We've seen a lot of developers go into Palm Beach County and really build it up to what it is now. So I'm kind of not really surprised to see Palm Beach County doing so well. What I am surprised about is Broward kind of taken a bit of a hit lately, because with Fort Lauderdale, I know a lot of people have been moving up there because they say it's a lot quieter. They say it's a lot better to live in. And, personally, I'm a Miami fanboy, so I'm going to, always root for Miami. But more than anything is I'm kind of still just a little bit surprised to see that that Broward County is having a marginally higher vacancy rate than Miami-Dade County or Palm Beach County.
That's because they build.
Oh, well, of course.
You're missing that, though. They're not taking a hit. They're building. When you build, your occupancy, you're adding space, you're adding supply. So your occupancy is always going to go down a little bit.
Yeah.
Until it normalizes. I mean, they're building because of their vacancy being so low. So don't get it twisted. They're all really strong vacancy rates. They're just we're comparing very slim margins. So, don't go crazy on saying Broward's taking a hit, because it's not completely true.
Right.
We're just looking at data and looking at, year over year and comparing the three markets. And yeah, Palm Beach County did better than Broward and Miami-Dade. Miami-Dade's also adding supply. You see everything that's going on downtown. And Broward's adding the towers, and Palm Beach is adding the least amount of new construction. Therefore, their current
vacancy rates are also going to be
lower. Current buildings are staying occupied,
right,
and keeping the vacancy low, which would allow the landlords, the owners, to raise the rents because there's no space. As soon as they would go to build, then you would see, and then they're going to build. They're building. Related Group's building the Twin Towers there, but it's not built yet, so it's not affecting vacancy. So as soon as those open up,
vacancy is going to be changed.
Well, yeah, it'll probably shift, and we'll see it. So that's everything I got. What else do you have? Another?
Well, I got one here. This is coming over by the South Florida Business Journal. This is Adrian Builders sell Miami-Dade Retail Center for $26 million. So let's go ahead.
What is it?
It's called Adrian Builders sell a Miami-Dade Retail Center for $26 million.
Where's the retail center?
I'm going to tell you right now. So An affiliate of the Miami-based Adrian Builders sold the retail center in the Tamiami neighborhood of southern Miami-Dade County for $26 million. The property was sold. They sold the 81,680 square footage property over at 12700 at 12750 Southwest 128th Street. So very, very close to the Miami Miami Executive Airport. As well, the property was sold to six LLCs, all owned by Thomas Burkano, and the 6 LLCs each sold separate gas stations in Miami-Dade 2 weeks ago to Wilmington, Delaware-based Trinity Petro, and it appears that the reinvestment of the proceeds went to this sale in order for them to go ahead and absorb it. The price for this deal equated to $318 a square foot, showing that there's still demand for the retail property in Miami-Dade as it holds up relatively well against competition for e-commerce. The shopping center's mostly local businesses, including a barbershop, coffee bar, tobacco shop, sports bar, a medical center, go ahead and say that the property is currently at 96% leased.
So 96% leased.
Mhm.
That's 4% vacant. That's all local vendors. You said it was 80,000 square feet. 81,000 square feet. But located proximity to the Tamiami Airport. $300 a square foot. It's a great sale. I mean, when you don't have any anchors and you don't have any credit tenants like that, I'm surprised that they went so in depth. I mean, why is this making headlines though? Like, is it?
I think it's because since we've been seeing so many e-commerce build up lately, that a lot of people are, and we're as well seeing retail currently within the last 2 years because of the pandemic, kind of, stumbling a little bit. This is showing probably positive signs of the retail industry coming back.
It's a nice story, right? Like, oh, here you go, 80,000 square feet, which is a big local, I guess you call it a strip center, because you don't have a big anchor, you don't have a grocery anchor. Looks like, I don't know when it was built, but it looks very nice.
It was built in 2018. It's a 2-story.
So newly built, newly constructed, highly occupied space, going for $28 million, $300 a square foot. It's good, man.
Yeah, and the area there I actually hang out by a lot.
I give some applause to the retail happening in Tamiami with proximity to the airport. I mean, anything when you have something built by the airport, whatever airport is, it usually does a little bit better, whether it be hospitality or retail. I mean, just the business travelers can hit up those places, especially when that's pretty much built for just the community if you're just having all local vendors in there.
Exactly. And actually, because since that's where it's very close to my rock climbing gym that I go to. And if you just go a little bit south of that, towards the end of the Tamiami Executive Airport, it's just neighborhoods. Lennar went in there, built up, so they're very, very close in proximity of a neighborhood that I think is within 10 minutes of it. So they've been getting a lot of traffic, more than likely.
Good stuff, man. What else? Anything else?
Nope, that's all for me. That's all for me today.
All right. That's all for Christian. He's signing out. So Miami, have a great day. South Florida, enjoy yours as well. We are getting out of here.
Goodbye, everybody. Have a great day.